So hello and welcome to the Assay. Today I'm here with Chris Berry, President of House Mountain Partners. So Chris, thanks for joining me today.
Thanks for having me, Amy. It's great to be back with you.
Always great to have you here. And so maybe, for any readers who might be unfamiliar with you, can you tell us a little bit about your background and current role in the space?
Sure. Currently based in Washington, D.C., I have been involved in the lithium-ion battery supply chain as an independent analyst and an advisor to investors and companies along the supply chain, whether or not they're EV manufacturers, oil and gas players, technology players, you name it, for about the last 14 years. And prior to that, I was in New York for about 20 years with different roles across the financial sector. So I would say, in terms of where I focus, I really have two niches, if you will. Number one, I call the extreme upstream. So if we are going to decarbonize or electrify the economy, however you want to define that, where is all of this raw material going to come from? Number one, and then number two, how do we build these supply chains? I think a lot of the metals that we talk about, breathlessly, lithium, cobalt, graphite, rare earths, the irony is they're not rare. What is rare is actually producing them at scale and on spec. And so do a lot of work with investors trying to answer that specific question, number one. And then number two, I've spent about the last 7 or 8 years really heavily involved in lithium-ion battery recycling. I think for a number of years, folks thought, well, if there is a structural gap, for example, between supply and demand for lithium, perhaps battery recycling can fill that gap. The short answer is that it cannot, for reasons perhaps we can get into, but nevertheless, spent a lot of time over the last 7 years, board level experience with lithium-ion battery recycling plays. Again, really understanding that ecosystem and helping investors of all shapes and sizes figure out, where along the supply chain they want to play.
Absolutely. And yeah, I think the recycling aspect has been one that's been, coming into discussions quite a bit lately. And let's definitely get into that in a little bit. But first, I thought we could just look at, there's been a lot of geopolitical tension globally over the past year or two. Can we talk a little bit about the role of these kind of key critical minerals in terms of national security and, regulatory discourse?
Sure. Well, look, again, as I mentioned before, I'm based in DC. And so I think if there's one change that all branches of government have come to embrace, it's the fact that economic security and national security, that line has blurred, okay? And there are a host of factors behind this, but I think kind of the major one really involves China and these multiple China shocks that we've seen over the last couple of decades, whether or not it was China joining the World Trade Organization in the early 2000s and really building its own industrial capacity, again, with these metals as kind of the centerpiece of that industrial capacity. And so, that has, I think, sent shockwaves, not just, throughout the world, but obviously here in the United States. And that really, again, underpins this realization that, look, maybe self-sufficiency in the metals is or is not a realistic goal. Again, there's an argument that is raging in Washington about what we want to do there. But nevertheless, these metals, again, I mentioned before, some of them just as an example, underpin that shift and underpin that change. And so what you see happening here in North America and in the European Union is this kind of attempt to catch up as national security and economic security are really one and the same now. Again, the question becomes, how do we access the raw materials and how can we efficiently allocate capital to build out the supply chain, whether or not it's mining and refining or cathode and anode materials or recycling? The lithium-ion battery supply chain is sort of like the Hydra, right? You've got many heads, all of which have their own sort of supply and demand and CapEx and OpEx dynamic. And managing that is really, I think, the biggest challenge for Western policymakers and Western companies in the coming years as well. But again, it all starts and ends, in my opinion, with access to the raw materials. And so that's why you're sort of seeing them under a microscope.
So maybe we can look at where where these raw materials are coming from, who is funding, who is funding new projects for exploration to get these kind of key metals out of the ground?
Well, the challenge right now, and I think this is something that a lot of investors that did not necessarily focus on battery metal supply chains have come to realize, is how incredibly sensitive the economics are to the volatility in metals prices. Okay, if we were having this conversation in late 2020 when Tesla was doing their, I think they were doing their battery day, if I'm not mistaken, you had lithium carbonate, battery grade lithium carbonate, that was priced at about 6,500 US dollars per ton, give or take. Within the next 22 months, that price went from 6,500 to 80,000 US dollars per ton. And again, there are a number of reasons behind that. Some of it was demand driven. A lot of it was FOMO, or fear of missing out. So you saw this gigantic exponential rise in the price of lithium. And then over the next 12 to 14 months, you saw lithium pricing collapse back to, I think, around $14,000 to $12,000 a ton. And so what lithium pricing sort of did was, exploded higher, fell through the floor, and sort of wobbled. And right now, I guess the good news is, we're at a bottom with not just with lithium, but with a lot of these metals prices. Nickel, cobalt come to mind as well. Now the question becomes, well, what is going to turn this market around? And obviously, it's going to be higher prices. You are not going to incentivize whether or not it's mining companies or individual investors to fund, I would argue, greenfield projects at current metals prices. And so a lot of the capacity that has been built out in the last couple of years is going to need to be rationalized. And that's actually one of the things that you're starting to see in lithium in particular. I think the name of the game today and over the next probably year to year and a half is going to be consolidation and M&A. Okay, we've seen Rio Tinto acquire Arcadium just last week. Piedmont Lithium and Sayona talked about a merger. You couple that with capacity cuts, many of which we've seen in Western Australia. And so that is what I think puts a floor under metals prices, of course, in this case, lithium. But you're going to need to see a lot more of that before we start to get to a point where we're off to a new cycle. So again, the good news is, I would argue this electrification theme, EV demand, et cetera, is intact. Certainly, we're not growing at the same rate that we were a couple of years ago, I think, because EV demand has softened. But you're going to, in order to continue that, even at current EV demand growth rates, you're going to need a lot more raw material, right? That's not a secret. Everybody knows that. But right now, pricing, I would argue, is too low to incentivize a lot of greenfields capacity. And so you can start to see with what's happening in these markets today, the seeds of the next boom. And when that comes, anyone can speculate. I think we're probably 18 to 24 months away from sort of a new metals cycle. And so the paradox here, or the irony, is that, when everything's down and everybody hates the sort of the theme in the metals is when you should be investing. And that's why, the Rio Tinto acquisition of Arcadium, I thought, was so interesting. And ultimately, I think will be very beneficial for Rio Tinto, because they are buying at the bottom, at least in my opinion. But it's challenging right now, just from a macro perspective. And then, of course, you've got the political kind of dust, if you will, still settling here in Washington, D.C. in the wake of Trump's election. And so a lot of investors are also trying to say, well, wait a minute, before we invest in the supply chain, whether or not it's mining and refining or cell manufacturing, what are the rules going to look like come January 25th, 2025, when Trump takes office? And so there's a lot of pearl clutching and hand wringing, for lack of a better phrase, going on right now, trying to figure that out.
And how do you think kind of this new administration will impact, supply chains, this kind of deglobalization trend, and everything else that we're seeing along with electrification?
Well, I think it's becoming clearer. Okay, but it's still, like I mentioned before, the dust is still settling. I think if we just look at the Inflation Reduction Act, certain portions of it, certain pieces of it with respect to electrification. Because again, the IRA is a 739-page document that touches a host of different parts of the U.S. economy. It's not just about batteries, even though that's what we tend to talk about a lot. I think that certain pieces of the Inflation Reduction Act are going to go away, one of which is Section 30D. 30D is the consumer tax credit that you can qualify for and take advantage of here in the United States, up to $7,500 US per vehicle. That one will likely go away, and again, that will affect EV manufacturers here differently. Again, without getting in too much into the weeds, it's not terribly easy to qualify for that tax credit as an individual, and so there's lots of nuance there. But I think that will go away. I think with the drive here in Washington to simplify government and cut waste and all that kind of stuff, I think 30D is probably low-hanging fruit in that respect, and so Trump will move to get rid of that. However, some of the other subsections of the Inflation Reduction Act, I think, are incredibly valuable and strategic. And one of those is Section 45X. 45X has a couple of different pieces to it. Number one, it offers a 10% credit on operating expenses. So if you are, for example, producing battery-grade lithium here in the United States, or you are recycling material here in the United States, and again, producing battery grade materials, you can qualify for that 10% OPEX credit. So that's pretty good. And I think we'll stick around. The other piece of 45X, which is much more important and much more strategic because it really focuses on bringing foreign capital into the United States, is a $45 per kilowatt hour tax credit that is associated with 45X. Okay, so this impacts companies that build either battery cells or battery modules here in the United States. When you look at, and that is in effect today, okay, and so when you look at the financial results of a company like Panasonic that is producing battery materials here in the United States, or LG, it is incredibly lucrative for those companies to come here, build battery capacity, and start producing batteries. I mean, it can literally, make or break your quarter from a financial perspective, because a lot of these companies are publicly traded. So I think, the irony of the IRA, maybe not the irony, but one of the challenges with the IRA is that it was sort of misdirected in terms of the pieces of the supply chain that it's trying to incentivize. As discussed, if you are a Panasonic or an LG or an SK, sort of a foreign battery manufacturer, this subsection 45X is literally going to be worth billions of dollars in revenue for you as you produce batteries here in the United States. But other pieces of the supply chain, like, for example, mining, or even that 10% tax credit, that's a nice to have, but it doesn't really fundamentally change the economic sort of question. It's still very, very capital intensive to build that upstream capacity here in the United States. And so, if President Trump, if his administration does one thing, or if I have a hope of what they would do, I think I would hope that they would re-examine the Inflation Reduction Act and say, hey, you know what, it's very valuable for the downstream portion of this battery supply chain, but what about midstream and upstream? Is there anything else we can do? And so, again, it remains to be seen. One other point I would make, the Department of Energy has their Loan Program Office, which has survived multiple Republican and Democratic administrations. I would expect the LPO, as it's called, to survive the Trump administration. However, what you're seeing right now here in Washington is the LPO is very busy. They literally are, putting money in a bazooka and blasting it at projects to provide what's known as conditional commitment or conditional approval. That almost certainly will slow down under President Trump. So the loans and the grants coming out of the Department of Energy to build the supply chain may not be there in the same sort of quantum that they have been in the last few years. So that's another thing to think about. One other thing, I know I keep going on here, but it is important, is the effect of President Trump's tariffs. Okay, he's talked about 60% on Chinese materials, 10% globally. Even last night, he came out and talked about I think it was a 25% tariff on materials coming in from Mexico and Canada. Again, it's an economic discussion. I think really trying to understand the nuances of tariffs and who they benefit and who they harm. But in general, tariffs are going to make this supply chain and this battery, material processing capability more expensive, not less expensive. Even through, even if scale does make itself felt here. I guess here in the United States, tariffs are arguably not the way to do it. And so that's another one of these wild cards that I think everyone is concerned about here, not just in DC, but all over the place, because that really can, negate some of the positive effects of the IRA.
Yeah, no, absolutely. I mean, there's so many kind of factors that remain up in the air, and it does seem like a time will tell type of situation. So moving on to China, which you mentioned earlier, it's reached a really big milestone this year with new energy vehicles surpassing ICE vehicles. So looking at kind of this trend of electrification and EVs, are we seeing similar trends globally in terms of the growth of EV adoption?
You are. I mean, the EV story is a China story. Okay, it always has been, and arguably it always will focus on China. I mean, EV penetration rates are 40 to 50% in China today, much lower in the EU and in the US. The EU penetration rates vary by country, but they're nowhere near that 40 to 50%. And I think here in the United States, we're at about a 10% EV penetration rate. I'm sort of spoiled living in Washington, D.C., because the EV penetration rate here is much higher than 10%. But again, this is, DC is not the real world, right? I think that so you're unlikely to see EV penetration rates in the EU or North America anywhere close to China anytime soon. My sort of bullish case for North America would be an ultimate EV penetration rate of around 30%. Okay, so if we're at 10 today, we're going to 30% towards the end of this decade and into the 2030s, and perhaps slightly higher in the EU. It remains to be seen. Now, you may think that a 30% EV penetration rate is disappointing, but when you have a market where 16 million cars per year are sold, 30% of 16 million is a sizable chunk. And so, there's a fair amount of optimism there. It's obviously the biggest issues right now are range anxiety and just the cost of an electric vehicle. I personally don't think that range anxiety is an issue. But, a lot of folks haven't been behind the wheel of an electric vehicle and don't really understand that yet, but I think ultimately will. The cost will come down through scale and investing in innovative battery technologies that can increase energy density and perhaps use different raw materials or less raw materials. And so, look, the trend is on track. We're not growing to the extent that we thought we would a couple of years ago. And I think, one of the things to watch right now is the growth of hybrid vehicles. Which again is not what everybody wants to see, but if hybrid vehicles and hybrid sales can sort of serve as a bridge to the point where, okay, range anxiety is not an issue, charging infrastructure has been figured out, that's when you probably could see us maybe go north of that 30% EV penetration rate sometime in the next decade. So China really does set the model, but again, they've been working on this electrification theme for the last, 10 or 15 years. And so we just got a lot of catching up to do, but it's still very, very positive.
All right. So you mentioned that you also look at battery recycling. So maybe you can talk a little bit about how that can potentially be impacting supply moving forward as well.
Sure. I am enormously bullish on the possibility of lithium-ion battery recycling to become its own sort of sustainable business and ecosystem, and ultimately impact supply of the raw materials in a positive way. That said, I'm really as bullish and as optimistic as I am today. I really don't see recycling making a significant impact on supply of these materials before early in the next decade. And there are a number of reasons for that. Number one, the amount of feedstock is growing. Okay, it's not a gigantic market yet, but it will be soon. And when you think about recycling feedstock, you have two buckets, if you will. Number one is battery scrap, so batteries that don't, that are being made, but for whatever reason there's some sort of a technical issue and they can be recycled, or end of life packs. Okay, and any EV battery that is coming off the line today is going to last at least 10 to 12 years. If we, and that's in general, right? I mean, for the way a normal person might drive an electric vehicle. If it's a Tesla taxi or something like that, zipping through New York or Hong Kong or anywhere, any big city, yeah, that battery is not going to last 10 to 12 years because it's going to get beaten up. But in general, this huge wave of feedstock in the form of end-of-life packs, I really don't think it's going to materialize before 2030 at the earliest. And so, what can we expect from recycling between now and then? I wouldn't think that recycling would provide more than about 7 to 10% of lithium supply by 2030. If you want sort of a crazy prediction, I would think, though, that over the course of the 2030s, you could see a situation where later next decade, we are in a situation where, as battery recycling capacity has been built out, supply chains have been, the kinks have been worked out, for lack of a better phrase, you could have a situation where mining capacity, virgin mining capacity for the battery business flatlines, and more and more and more of the raw materials, the lithium, the cobalt, the graphite, because it is involved in a circular supply chain, more and more and more of that raw material stays in the supply chain and becomes a majority of feedstock for new batteries. So again, not something likely to happen before mid to end of next decade, but I could see something like that happening. So very bullish on it, just not quite yet.
Yeah, no, absolutely. In terms of economics and technology, probably still a while to go. But yeah, I mean, certainly, so much to be kind of keeping track of as we continue along this kind of trend towards net zero and further electrification. But so those were all the questions that I had for you today, Chris. I want to thank you for joining us here on The Assay.
Thank you. I appreciate the opportunity.